Hey guys, I just want to hop on quickly and talk about exposure to Russia with your investments. So, okay. So, if you're holding emerging market ETFs, okay, so if you're with a robo-advisor, you probably got an email saying, okay, well, these are the ETFs that we have that are exposed to Russia. Maybe they said that they can swap it out for you. So you can just let them know. You probably just have to hit reply, let them know to swap out those ETFs for you. If you're managing your own ETF portfolio and you're wondering how much exposure you have to Russia, you're going to go into your portfolio and look for the emerging market ETFs that you're holding. And then when you go into, when you look it up, like whether it's through BlackRock or Vanguard or BMO or whatever, whichever, you go on their website and then you scroll down to the geographic exposure. You're going to see how much exposure that emerging market ETF has to Russia. Has the Russian exposure. So in the grand scheme of things, like overall, it's going to be a very, very small percentage of your overall portfolio. So it's going to be really small. So it's not going to affect your overall portfolio. Now, several reasons why you want to consider swapping them out. Okay, so two reasons being common reasons. One, if you're like, I don't want to support Russia and like any Russian companies, cool, right? You want to remove them, sell that ETF, remove it from your portfolio, and maybe buy another emerging market ETF that has no exposure to Russia. So you have to do a little bit of research. If you message me if you're looking for. I have one in mind. I can't remember what it's called, but just shoot me a DM. There's one emerging market ETF that has no exposure to Russia. It's a little bit on the higher side in terms of the fee, but it is what it is, right? The other reason being Russian markets are still closed. So they've been closed since February 25th. And as soon as they open the stock markets, and there's good reasons why they closed it, because as soon as they open, all the investors are going to just dump all the stocks. Their stock markets are going to go into a free fall. So that's why they closed the stock markets. They kept it closed. It's still closed. So the funds that are holding Russian stocks, they're just holding it. Like nothing has happened. There's no like reflection of value. The stock's value, because there's nothing being traded right now. So right now, and that's why it's, if you do this before like Russian stock markets open, who knows when they're going to be open again. You kind of like avoid that bit of that free fall that's going to happen. So, but even then, like in the grand scheme of things, if you have a well-diversified ETF portfolio and you have emerging markets in it, your exposure is going to be small. But right now, since the Russian markets are closed, it's not reflecting, it's not being, that sell that's anticipated has not happened yet because the Russian markets are still closed. So these are two reasons why. If you're looking to swap out your emerging market ETF because you want no exposure to Russia, you can probably do it now. So two reasons. One being you don't want to support any Russian companies. You don't want any exposure to Russia. And the second being the Russian stock markets are still closed. So kind of, if you do it now that everything's kind of like at a standstill. And for the portfolio managers that are managing these ETFs, that have these Russian companies, there's nothing they can do either. They're just like holding these stocks and that's it. They're just holding onto it. They can't sell anything. They can't buy anything. So that part is just like, it's very illiquid. Okay. They're unable to, sell or buy. So if you have any questions around exposure to Russia and what you can do, shoot me a DM. I'll do my best to let you know if like what other options you have. But for now, in the grand scheme of things, it should be a very small portion, a small portion of your overall investment portfolio.